Very good morning to all. Today we will see final accounts. So final accounts problematic view, it is divided into three parts. First part talks about trading account. Second part is talking about P&L account. Third part is talking about the balance sheet. So let us see one by one. So usually final accounts are prepared at the end of the financial year to know the financial position of any organization. Okay. Hope everybody sees my screen now. The final accounts usually prepared at the end of the financial year to know the financial status of the company. This is for the primary purpose. Secondary purpose, it gives information to government for taxation purpose. It gives information to business owners, the founder of the business or promoter of the business, investors, bankers, and so many people, right? So usually we look at these are all the different types of account: trading, P&L, balance sheet. We'll discuss one by one. The trading account records all the transactions which is happening inside the factory. For non-commerce people, try to understand. So it is happening inside the factory, inside the production space, inside the operation space. Is that clear? Just trading account. Okay, what are all the items we would cover in trading accounts? So number one is opening stock. Opening stock refers to raw materials, work in progress, and finished goods put together. It's called stock. Stock refers to raw material, work in progress, and the finished goods. So raw material, you know, right? When you want to make sugar cane juice, sugar cane will be the raw material, correct? What is work in progress? The sugar cane which went inside the machine and it is on the crushing process. Those things are called work in progress. You are given the raw material as input, but you haven't received the output. The machine is processing something that's called work in progress. Okay. Closing, I mean, finished goods, you know very well, right? It simply refers to the goods which are finished and which is meant for dispatch to customers, right? Okay, stock includes, as I said, raw materials, work in progress, finally finished goods. The finished good is a juice here. Sugar cane juice is finished goods. Purchases, whatever the purchases you make, whether it is cash or credit purchase, we will put in the debit side of trading account. Opening stock, debit side of trading account. Any direct expenses like freight charges, carriage charges, custom and import duty, gas, electricity, water, packaging material, wages, and any other expenses which is directly relating to production department or manufacturing department, we will put it in debit side of trading account. Understood? See, it is very simple. You are supposed to classify the revenue under the expenditure. If the expenditure is related to production department, then definitely that is trading account. See all these things, right? Freight charges, carriage charges, all those things when you purchase and sell the goods. When you do this purchase and sales activity, all these expenses you would incur. When you produce, you need labor, so you pay wages, correct? Once the finished goods are ready, then you need to package it inside the factory and let them go out, correct? Then coming to your electricity, fuel, water, gas, everything is important for production, correct? Without that, we cannot do any production. Give me a minute. Yeah, continue. Sales account. So whether it is a cash sales or credit sales, that will be recorded. The credit side of P&L account. Okay. Sales should be a net sales excluding sale tax, VAT, customer excess duty, whatsoever. All those things we will deduct in the debit side and we will put sales in the credit side. Closing stock. That means when you are closing the business the previous month or the previous day, what is the value of the stock? Again, you should talk about raw material, work in progress, and the finished goods. Yeah. So sometimes you are supposed to find a closing stock, they may not give. This is the formula. Opening stock plus net purchases minus net sales. That's all. So this is a gross profit formula. Gross profit equal to sales minus cost of goods sold. Some cases we will prepare trading account, in other cases we will prepare manufacturing account. For example, manufacturing account is prepared in case where goods are manufactured by the firm itself. In case if it is a trading account, either you can manufacture a good or you can buy the good and sell it. So that is trading account. But manufacturing account specially meant for you are manufacturing the good. Manufacturing account represent cost of production. Cost of production then transferred to trading account. So from manufacturing to trading account will come. But usually we will not do manufacturing account process because we will know what is cost of the production by using your trading account also. Okay, this is what I have been discussing so far. The raw material, work in progress, finished goods. Okay, raw material consumption you want to know, opening stock plus purchases minus closing stock. So the answer would be the raw material consumption. So this is how to find the cost of production. What is cost of production? See, cost of production refers to cost of manufacturing a particular product. For example, I manufacture pens. A single pen Manufacturing cost to 5 rupees, correct? This is cost of production. Cost of production plus profit equal to sales, correct? I manufactured the pen for 5 rupees, I sell it for 8 rupees, so my profit zone is rupees 3. Clear? So this is the format. So opening work in progress, raw material consumed, wages, factory overhead, that is factory expenditure, nothing else. Fuel, depreciation on plant, rent, other factory expenses. See, this is manufacturing account. Most probably you will not use it. For knowledge sake, I am teaching this. By closing stock of work in progress, by scrap value, by cost of production. Usually the cost of production will be your balancing figure. So both the side, the value should be same. Okay. So this is the pro forma of a trading account. Opening stock, directly outer value, purchases, usually put inner column, return outwards, which means purchase return. So another account. So purchase minus purchase return equal to net purchases. Correct. We should take net purchases to the outer column. Then wages, freight, carriage inwards, clearing charges, packaging charges, dock dues, power, auxiliary duty. See, all those things you will involve when you manufacture a product. When you produce a product. Look at here. By sales minus return inward, what does it mean? Sales return. So net sales is taken to outer column. By closing stock, by balance, usually gross profit will come. So gross profit will be tallied in the debit side. That is the balancing figure usually. Rare cases, gross losses will come. That will be tallied in the credit side. Okay. Let's explore a problem to understand it better. Okay. So trading account, debtor side, creditor side. Okay. This is the pro forma for your understanding. And today's assignment is this. You should write pro forma of your trading P&L and balance sheet. That's it. Okay. So let us listen. Stock on 1/4/2015. What does it mean? So opening stock, right? Opening stock 20,000 rupees. So this account I will take. Hey, okay. So opening stock 20,000 rupees. So and the trading account I made opening stock 20,000 rupees. Correct? Okay. Then what we made? We made a cash purchase 30,000 rupees and credit purchase 20,000 rupees. Correct? See here, cash purchase 30,000 rupees and a credit purchase 20,000 rupees. But whenever purchase and sales comes, you should put it in the inner column because sometimes there may be purchase return, sales return, and other activities also. Okay. Look at purchase return 1,000 rupees. Correct. So that also we have given purchase return 1,000 rupees. So in case of purchase return, we need to deduct it, right? That we could have seen in the ledger part itself. Whenever purchase happens, we'll put in other side. And another side we'll put in purchase return. So that is minus. Next entry, loss of goods by 5,500. So this entry usually will not come, but rare cases there may be entry like this. So this loss we need to transfer to P&L account. So we put by P&L account 1,500. Let it be. Wages 400 rupees. Correct. Wages 400 rupees. And move on. Okay, whenever return inwards is there, it means sales return. So definitely sales will be there. So return inwards I write. So whenever you encounter any transaction, keep on recording it. You don't need to do any other thing. So finally you will get the thing is done. Commission on purchase. Commission on purchase. How much? 100 rupees. Commission on purchase 100 rupees. It is like a middleman commission. So we need to deduct it. So we are putting in the debit side. Closing stock. Correct? Credit side. Closing stock. Then go up. Octroi duty 75 rupees. Drawings of goods by the preparator 500 rupees. So both the values should be taken to debit side, but these goods we need to deduct from purchases because he made some purchases for his business, but for his own purposes he has taken some goods. Correct? For his own purposes he has taken goods worth rupees 500 and octroi duty 75. We have also seen this entry. Clear? Expenses of taking delivery. So delivery expenses. So whenever I paid expenses, it is for my own goods and services. Clear? Delivery expenses. And then go up. Goods are given as charity. The goods which I purchased for production purposes, I may give as charity one. There is a possibility, right? Here is given as charity. So that we need to deduct from our stock. So charity goods, that is deducted. Look at the symbol, it is in minus. It means add cash purchase and credit purchase, then minus all those things. Courage inwards. So this point I explained already, right? From the company premises to your production plant or your godown. So carriage inwards, debit side of P&L. Goods are given sample 100 rupees. So when you give sample, you cannot charge them, right? So that is like goods going away without any monetary benefit. Then goods sent on consignment at cost. So some goods you sent on cost. You didn't sell it, but I mean you didn't sell it for profit, but you sent it at cost. That is no profit, no loss scenario. You sent it to somebody. Maybe it's your friend's company, you are helping him. In that case. Okay. Then rent and taxes 500 rupees. We are not sure whether it is factory rent or office rent. Is that clear? If it is a factory rent, that is coming under trading account. So here they haven't taken rent into account because it is a office rent. Office rent we will not vouch in factory expenses. Correct? Discount 200 rupees. Clearly, it is not mentioned what type of discount it is. So that is not taken. Clear? Then commission 400 rupees. Again, that's not taken. Traveling expenses 700 rupees. Anyway, that is not part of your factory expenditure. Correct? Cash sales and credit sales 30,000 and 40,000 rupees. That is given here. So cash sales, credit sales. Now our duty is to tally it now. So opening stock directly outer column. Don't worry. Purchase, there are a lot of transactions. There's a cash purchase. There's a credit purchase. Add both. Then minus purchase returns. Minus owner's drawings as goods. For example, you are running a provision store. You take some provisions to home, right? That is drawings here. Drawings in the form of goods. And you give some goods to uh, old age home or any charity. That is minus 100. Goods as sample. You send sample to your customers. That is again deductible. So the net purchases is 48,300. Carriage inward is given in the question. Wages is given. If they mention it in commission on purchases, then definitely we will take. Blindly mentioning commission means it is going to P&L account. We will not vouch it in trading account. Direct expenses of taking delivery, as delivery happens in the production premises, so 25 rupees. Next, buy goods sent on consignment account. So goods going out, it's like a sales but not on profit zone. Buy cash sales and credit sales 40,000, 35,000. Correct? Minus 2,000 rupees, that is sales return. So net 68,000 rupees. Again, this is the amount which is lost on fire. Correct? Then finally the closing stock is 3,500. If you tally both sides, this side will lag 4,150 rupees. Okay, this side will lag 4,150 rupees. So this side, if there is a balancing figure, that is called gross profit, which is taken to P&L account. And now the session is open for discussion. Have you understood the trading account and what is the purpose it is used for? You can unmute yourself. Any doubt, any clarifications on trading account? So trading account specifically, what are all the transactions happening inside the production premises? That's it. What are all the transaction happening inside the production premises? Clear? Chat window is open anyway. You can give a chat message. See, assignment will be you need to write a pro forma of trading P&L and a balance sheet with all the items. Pro forma means it is not like drawing a table and showing it. All the items should be there, like opening stock, closing stock, gross profit. All those items should be there. It should be a complete pro forma. Format as usual PDF. We will send you the form uploaded. Any doubt in trading account? So I am giving you the attendance link. So that you can fill the attendance. Yeah, you can fill the attendance. It will be open for a short time. Any doubts you can ask me now. We are having 5 more minutes. Your assignment is you should draw the pro forma of trading P&L and balance sheet. Attendance link, check your chat box. Yeah, now check it. Okay, thanks for attending the session. Kindly complete the assignment. Good day.